Hey everybody, welcome to Trading Capital. In this analysis, we're going to cover the four asset classes that I think can be used in correlation together. Gold, silver, Bitcoin, and Ethereum, and a couple other cryptos we'll touch base on. Starting off with gold's price action. As you can see, we've had this huge, massive parabolic run-up. And this is the move that, funny enough, all the indexes have done in certain stocks like Apple, this parabolic move up. And when something goes straight up, it usually comes straight down. So to fulfill an angle of this degree, you need immense buying power to continue it. But once that selling pressure, once the buying pressure abates and that selling pressure moves in, you see these tremendous moves down in short fashion. So let's jump right into gold. Right off the bat, I see this. Now, it's not a very symmetrical head and shoulder, but nonetheless, it is a topping pattern in the short term here that we are dealing with. And it's, I don't want to call it a classic head and shoulders because it's far from that, but nonetheless, you could constitute that you have a left shoulder here, a top, and a right shoulder. And the key question is, will you break your neckline here? And one thing can argue is that your neckline was here and here, and you did pierce it below, but let's just say it's over here. You also have another pattern, putting aside this head and shoulders if you don't want to pay attention to that because it's not the symmetry is not quite there. You know, you have one wick here and enough there, but let's just put the head and shoulders aside and let's just focus on this bear flag pattern. This is clearly a bear flag pattern. You have this flagpole here, and you have this secondary channel that you're trading within, you know, these two red lines. So that's going to be key to watch. And according to my technical analysis, from what I see on the pattern is, and you have to really zoom in, is we actually triggered the bear flag pattern here by making a lower low over here. Now, you still didn't take out these lows, so that'll be your next target to watch. But in my opinion and from my understanding of technical analysis, you've definitely made a new technical low, even though it's a tail, and you've triggered this bear flag pattern. So it's a higher probability that you do have a move down. And where we're going to be a big buyer is essentially on this trend line. And it's going to coincide with this falling arc, but basically down to this blue trend line, that's where we're going to be looking to accumulate our gold. And if it goes lower, so be it, but that's where we will be ultimately looking to start acquiring a big position again. And, you know, basically there's a strong probability that it could intersect somewhere in this range here on this trend line. Generally, the pattern likes to retrace to the original impulse move breakout, and we certainly could see that. But notice how you're flagging sideways in this bear flag pattern in between our old resistance lines. So our first resistance and our second resistance, and now those have become your support. Well, technically your second resistance is still a resistance here, but your first resistance is your support line, and I ultimately do think we break that. And what could cause gold to flush? Well, potentially some sort of more resolution, a ceasefire in Russia. With rates falling, I think that's going to put pressure on the whole economy as it senses that the economy is weakening. So less people will be having money to spend on buying investments. So I think gold is really going to rise with interest rates, and that's a weird correlation to make because it's not typically what the price action of gold to the interest rate correlation has done over the last 20 to 30 years. Typically, when you have higher interest rates, gold falls, and when you have lower interest rate, gold rises. And we do still have low artificial real interest rates, even with nominal rates now starting to increase. Real interest rates are deeply negative, which supports the overall medium and longer term thesis that gold should really excel and keep excelling. And it does, and I think this is where people have to realize is interest rates are going to be rising because of inflation. The policymakers at the world central banks have no other choice at this point because inflation is starting to be noticed by the public. And in fact, I think on Google Trends, the most Googled word in the last week of the quarter was stagflation, it was a trendy word, stagflation, and that's the boogeyman of economics, where you have high inflation and low economic growth, or no economic growth. So there's a lot of buying power destruction and wealth destruction in that economic environment, and it's a strong probability that we're heading in that direction. We still need more data, but it's a very likely outcome that we are heading down there. So again, a buyer in and around this 1830, 1840, 1850 area, or if it goes any lower, let's jump into silver. Silver has an interesting chart, and I want you to observe on silver. Here's the thing about silver. I think silver could really come back down to the lows of this channel here. And what makes me, speculate that silver could come down here for another, triple bottom is the fact that when you look at gold had basically this double bottom and then this initial breakout, okay, that looked like it was off to the races, and then it sold off heavily and it came back and made a triple bottom before it's really put in a strong sturdy base to have this massive breakout. So when you look at silver had this first bottom, run up, second bottom, breakout. So off of the second bottom, when you observe what happened to gold off of the second bottom here, gold looked like it was breaking out, but ultimately came back down for a third bottom. And that's why I think silver could come back down for a third bottom before it truly breaks out. And precious metals are such it's an asset class that tends to bring a lot of people to their breaking point, because it often is it's an asset class that is dormant for months or weeks and months and years on end until it finally isn't. And it has a way of shaking out investors like no tomorrow, because it tends to underperform for long periods of time, and then when it doesn't, it really starts to outperform. So we're looking for an overall lower silver. If it comes to this 21 level, this triple bottom, we'll be buying with both hands. We may start to accumulate a smaller position at a higher level somewhere in this area, just depending on what the overall market sentiment is, how the price action gets in there, if there's any economic data that we need to be aware of that could influence this. And you can notice here that silver had a strong bounce off the 200-day. Didn't make a bottoming tail, but nonetheless that is a big tail. Shows that lots of buyers are there. But if we have a resolution in Ukraine, if there's constant economic destruction, and if the thesis that here at Trading Capital stands true, that there is going to be some economic decline, liquidity crisis, that will naturally put pressure on 50% of silver's industrial demand. So that's why we do think silver could ultimately fall, another, say, 12% to really put in that solid base, that triple bottom, before it breaks out to the upside and makes potentially new highs. And again, if we look at gold, how much we think gold can fall, gold could fall potentially another 5%, which would put it at that 2%, that 2 times the ratio of silver could fall. So, or just a little more than 2 times the ratio of gold. Let's jump right into Bitcoin. Bitcoin's price action, as you can see here, we're just going to right away put our channel analysis through here. So I'm going to start this channel from the old Head and Shoulders left shoulder low, taking it to the right shoulder and the neckline area. And take a look at this level of support. So you have this pivot low on the original breakdown of the left shoulder, M top. You have this flush out low, which is the right shoulder pivot low. And then you have your initial impulse move down, breakdown in the pattern that triggered this M top sell off. And then you have your pivot low, which you bounced all the way up to your pivot high, which you broke down all the way to the pivot low, bounced all the way up, didn't quite kiss the top of the channel, sold back down below your center point and trading in your lower channel range before you broke up, kissed the top of this channel, which also happened to be the 200-day moving average, and it also happens to be the neckline of the head and shoulders pattern that you broke down on. So now the question is this going to be a consolidation that takes effect before you push through and break above this 200-day moving average and confirm? You have not confirmed yet above this 200-day moving average. Needless to say, you are on a weekly basis putting in this doji topping tail. Okay, so now it's key. You still have 1 day and 3 hours before this week's candle is finished. So it's going to be very key to see what price action unfolds with Bitcoin. We're in the camp, we are shorting Bitcoin at these levels. We have a couple levels higher above, but we're in the camp that you have to have some sort of breakdown of this trend. We have not proven this channel. We have not broken out of this channel with sufficient volume, with any confirmation. So it stands to suggest that we still have to respect the channel. Now let's just say we keep consolidating sideways here. That will open up some probabilities of a potential higher move up and breaking above this channel. But notice you have some heavy resistance. You not only have this wide range red bar, but you also would be trading within this massive volume candle that you dumped out of. So you have a couple key areas of resistance that you'll be looking for on the chart, and those are going to be two major areas of resistance that need to be respected. And the risk to reward ratio, in my opinion, right now is not favorable. Long term, I do have a strong thesis and outlook for Bitcoin, but that being said, I still think in the short term there is more downside. We are in the camp that you come and test the lower range of this channel down here, just right down there. That would be a healthy area to buy and accumulate a position, because ultimately you do have a nice defined low to trade against. Okay, so to us, there's too much resistance on the upside, especially in the tightening cycle that we're entering in. Crypto assets have not proven themselves as an asset that can defy economic policy during this time. It may be getting a bump from all of the media publicity. There's a lot of campaigning now, midterm elections happening worldwide, and certain politicians, MPs are now pushing crypto to the public. Not only do you have the Russia-Ukraine war, lots of money is being siphoned out of the ruble or out of the Ukrainian currencies or any currencies nearby that could be potentially under fire. And it just shows that there is going to be a need for Bitcoin, but I still will find it hard to believe Bitcoin breaking out and making new all-time highs under these economic policy conditions that we're entering in. The interest rates have been rising steadily for a while, but the Fed fund rate has only just begun to move. So I still think the repricing of assets is going to occur. The final catalyst, I think, for the market will be that big word QT, quantitative tightening. I think it's definitely going to be thrown around by our FOMC members fairly soon here, which should start to spark and change the sentiment in the industry. So the debt to GDP, basically the ongoing debt expansion, money printing, suppression of interest rates, the deception about the true rate of inflation. How they always continue changing what's in the CPI, what's in the PPI, how to measure it, what we can and can't include. That's pretty corrupt in my opinion, or not giving the fair and accurate information representation of what the expense of the public is really feeling. And so when you factor in all of those factors together, and then you also have to include that the Federal Reserve has created one of the largest speculative manias in financial assets and real assets. Risk parity assets in the fixed income realm, including US Treasuries and other sovereign debt instruments from developed economies, were once thought to be a safe haven until the Fed just started printing gung-ho and printing and causing inflation to now be trumping and destroying the fixed income market. And a lot of investors still have not woken up to that fact, because they've been preaching when I say they, the Federal Reserve has been preaching transitory inflation. So when you keep preaching transitory to the whole market, and eventually the signs show that inflation is no longer transitory, they have moved their mandate, I believe, from 2% core inflation to now 3%. And it's substantially higher. I think the Cleveland Fed just predicted that the next CPI reading is going to come between 8 to 9%. That's astronomically high year over year, of course, but that's still record highs. And as the cycles show, when we reach peak inflation, bad things tend to happen shortly after. And this is a crisis that there's so many bearish signals that if you're watching and analyzing from a macro standpoint and a micro standpoint, there's so many tailwinds for this market. You have inflation, you have slowing economic output, you have supply chain disruptions, you have a war, you have debt to GDP at record levels, you have maxed out balance sheet, you have high margin levels. All of these different factors contribute to the overall thesis that this market has to have some sort of recession. And when you have a yield curve starting to invert, we have to see some consistent inversion for maybe a month or two before that really gets concerning. But it always starts, the inversion has to start at some point and continue for it to, show that history does repeat itself. And the way that charts are lining up compared to previous cycles that were just full of wealth destruction and massive collapses in overall stocks is downright scary. And frankly, the policy period that we've been in, this loose period for 3 years and longer, has really been one for the record books. But I think a lot of people are going to be hurt in the trend change in economic policy. So that's why I do think Bitcoin has to come down. Again, you have major levels of support coming up down here. Now you want to keep, you do have little minor supports with these wick lows, but you want to use the standout lows as your big major area of support, which would be in there. We're still in the camp that if this bigger pattern triggers, you have tremendous downside just by simply taking, from the pivot high all the way down to the neckline and carrying your neckline over to where the pattern failed and broke down. The fully measured move of this downside head and shoulders is around 17,000, which would make sense. Look at that. Look at how the fully measured move of that pattern connects to that pivot low there in 2020. That would be an incredible buying opportunity. The most bearish case in some sort of liquidity squeeze could be that Bitcoin comes down to this 12,000 area. That would be a complete washout low in my opinion. We would be accumulating for the long position. I don't even think we'd be trading in there. We would just be hodling for now the next little bit until we see those massive returns that Bitcoin tends to do on a yearly basis. I believe the yearly statistic around Bitcoin is roughly since its inception, and of course since its inception, the first say 6 years were its highest yielding years. So the statistic is a little bit misleading, but essentially year over year average, Bitcoin has performed 444% since its inception, outpacing most or any asset class that is. Let's take a look at Solana. Terra Luna, again, backing their balance sheet with Bitcoin, so that's why they've had this massive run up all the way from the 14th of March. This looks like kind of like a GameStop move in my opinion. I don't think it's going to last. You're coming up into resistance. You got this big wick high here, which obviously you ran into and you pulled off of. We had a short level up there. It did not get filled. It must have just missed it by a few cents. But we have 3 short levels here. That same pivot high one, and one just below the 200 and one just above the 200. So this asset class has had a tremendous move to the upside. It is overbought and extended, just like the gold chart. It kind of went parabolic. It definitely needs its pullback, its decline. It'll be interesting to see how this bar holds. So let's just go to the intraday hourly chart. Again, you are forming this sort of bear flag pattern, so it needs to recover that quickly before this gets a little long in the teeth. The level to watch is, do you take out these pivot lows and start getting into this green bar action high volume zone? If you negate this zone, look out below, because that's a pretty powerful zone to get through, and it'll definitely show a potential bearish top and likely more downside ahead. So if it does retrace up to, we'll be pulling the shorts, we'll be pulling the trigger on some of the shorts, as we do think it is extended. This is something, Solana, again, one of the cryptos that is going to have to be cleansed. Let's just, for my interest and mind, just see where this trend line goes. So, you could do that one as your breakout, but if we just simply connect those highs, it shows that you could run up a little bit higher and run into this trend line there. But if you were to bring your trend line down, there is a little bit of an intersection that you can say you ran into resistance. So we'll have to monitor that and see how the price action goes. But there is a potential short trade opportunity here. No doubt this is extended, has to have a mean reversion. Let's just see where the 50-day and the 200 is. So yeah, likely a mean reversion is back to these pivot highs at first. So right in around this pivot low at 118. If you break that, you hit the 50-day moving average, no problem.